Hello, traders. It is Sunday, June 28th. Looking at the overseas markets, looks like the S&P futures are down 14 points. I did not trade Friday. I took the day off, but man, we had a little bit of a nasty day. Now, I'm going to tell you that there are some technical breakdowns currently happening, but I'm still overall pretty neutral to slightly bullish here, and I'll explain why. Let's take a look at the price action on Friday. First of all, we had this down gap opening right here. You can see that was the prior day's close. And then the market kind of tried to find its legs. We had a couple of long tails under body. Here was the clue, though. We had this big spike in the 10P indicator and a bearish cross right in there. So that told us that we had some trouble. But it isn't until I see these red bars right here that ultimately take out the prior day's low that tell me that there is going to be some pretty heavy selling. So you get this early low in here, get a nice bullish cross right in there. Market tries to rally but can't get off the deck. By this phase, I'm thinking this is a bearish trend day. Get a little dip in the indicator, another little rally in here. Now, right here, you get a really nice 10P bearish cross. You can see it. The market was not able to get through the prior day's high. So now we have a lower high right here, and then we've got follow through selling with selling right into the closing bell. Pete, if I look at this chart, what the heck could possibly be bullish here? What you have to realize is that through the course of the last quarter, remember we had that massive sell-off back in March. You had a lot of funds that were coming in and they were buying down on this low right in here. Well, during the last quarter, you've had a big market rally, and for many funds, they have to have a fixed percentage in equities and a fixed percentage in bonds. So after a huge market run up like this, all of a sudden their equity value has grown dramatically and they need to sell some of their equities and rotate that money into bonds to preserve that percentage. So we were going to see a little bit of selling pressure on Friday. I think that might have had a little bit to do with it. Mainly, it's the coronavirus and the resurfacing and the impact that it's going to have on the economic recovery, the impact that it's going to have on consumer spending. So, right now, we're seeing a lot of states consider not rolling out their recovery and perhaps even retracting some of the phases because they're starting to see such a big spike. So, this is definitely not good news. However, we've got the government standing by with a $1 trillion infrastructure bill. We've got another $1 trillion possibly going into stimulus, which will probably be in the form of unemployment benefits that are extended, another PPP round to small businesses that ultimately is going to make its way down to the workers. So we know the government's waiting in the wings. We also know that earnings season is only a few weeks away, a couple weeks away now. So we're actually going to start seeing some of the impact that the coronavirus has had on profits. So I think that that also will give us some clarity. My approach to the market right now is I see some major technical support levels still ahead of us. This 300 level tested one, two, three times. This is the third time that it's tested it. We're closing below the 200-day moving average on Friday. I don't like that. The longer that we spend below the 200-day moving average, meaning the more closes that we have below the $200 or the 200-day moving average, the more significant that resistance becomes. And then now all of a sudden, the 200-day moving average, which has been support, becomes resistance, and then we would start testing the 100-day moving average. I see that SPY 295 level as a very sticky level. We do not want to go below this 100-day moving average. If we do, and the selling momentum starts to build, then who knows? We could come back down into the maybe 270, 250 level. I would see that as a possible support level. I believe that ultimately the recovery is not going to go as fast as we'd like it to. There's an awful lot of money printing going on, awful lot of stimulus yet to come. If the economy can start to gain some traction, not go back into a complete shutdown, which I think is unlikely. I think it's unlikely that we're going to go into a complete shutdown again. I think that this recovery starts to take root maybe September, October, and we gradually start to grind back. So, not a great situation for the market. I think that we need to wait to see how all of this plays out this week. This is a really, really critical week for the market. Well, what does that mean? It means I don't know for sure which way the market's going to go. So I better make sure that I don't have a lot of risk exposure on right now. I've been preaching this for the last 2 or 3 weeks. Keep your position small. Don't take a lot of overnight risk. Wait for clarity. See how these things play out. We've had a really nice rally off the market low. The market rally has been narrowly defined. Amazon, Apple, Google, Facebook, those have been the companies that are leading this rally, and they have accounted for most of the rally in the NASDAQ 100. So I'd like to see a lot more groups participating in that rally. Industrials, banks, retail, just get a great broad mix of companies, but that's not what we're seeing. So I feel that that also degrades the level of or the quality of this rally that we've seen. So as far as Monday is concerned, I'm going to show you how to find a couple of picks, but I would be waiting to see that support again. Here's what I would ultimately like to see as a bull or as a trader who's neutral to slightly bullish, looking for out of the money bullish put spreads. I would want to see the market come down, find support in here, bounce, and then get through this downward sloping trend line on the upside. Then that would tell me that these support levels will be fairly safe. Then we'll see how earnings season plays out. So when I go in and I take a look at stocks, I went into a search called Bull Run, and this has stocks that have really been pushing hard to the upside, even in a down market. And one that I saw that got my attention was CLDR. I like this stock. You can see how it was up Friday, challenging the all-time high. That's a really nice looking chart during market weakness. So I think this stock is going to continue to try and push higher. And I like that $12 resistance level, that support now. This stock should do quite well. LVGO is another one that caught my eye. We've traded this one before. I love this compression right in here, and I love the breakout to the upside. So I would be looking to sell something right around that $65 strike price. So you might have to sell a $65 put and buy a $60 put. I'd be looking to do that for a $1 credit. You can see how this stock has actually held up very well. If you can get down to the $60 strike price, let's take a look and see where these option premiums are. I believe they only have monthly options on LVGO, and that's true. So if you went with the 60-55 bullish put spread expiring July expiration, July 17th, then right now I click on that $60 put, I click on the $40 put, or excuse me, the $55 put. You can see that that is currently bid at 25 cents, offered at 55 cents. I'd need to be able to get probably 80 cents for that spread to make it worth my while. So the market looks like it's going to be pulling back Monday morning. That's one spread that I would be looking at. I think that's fairly attractive. If I were looking for other plays, I can run some very quick custom searches. So I'm going to click on custom search, and then I'm going to have my pop up here. I'll show you a very quick search that I ran. Again, I wasn't watching the market Friday, so needed to find which stocks might be attractive for Monday. Marked option liquidity, put a 0 value here, 15 value here, so these options will be fairly liquid. I was looking for a stock that was greater than the prior day's high. Okay, well, right off the bat, that stock had to be strong relative to the market because the market sold off hard. And then I marked trade signal bullish daily, 4-hour, 2-hour, across multiple time frames. I also marked relative strength to the SPY on a daily, 4-hour, and 2-hour basis. And I click scan. These are the stocks that came up. So if I went through every one of these stocks, you're going to see some really nice charts. See how easy it was? So these would be my candidates for Monday morning, but I can whittle that list down. I'm going to click on the first one, ALT. You can see a nice breakout right in here. You can see how the stock finished in the upper end of its range on Friday. Looks pretty dang good to me. I'd be watching ALT on Monday. Nice little horizontal breakout right here. BIG, there you can see, you'll have to ignore that last candle. Nice breakout through that previous high. Looks pretty good. BTG, that's too compressed. That stock is just chopping around. DOCU, super strong. Would I do some type of spread on this using that upward sloping trend line? Maybe not on this one because it's run so hard. It tells me that on a day trading basis, yes, it would be of interest to me on Monday. I'd want to see if it's able to continue that strength on Monday, especially if the S&P futures open lower. Next stock on the list, eBay. That looks good. It's trying to push through the upper end of this range right in here. And Etsy was one that caught my eye. Love that horizontal breakout right there. Look at that stock hold the gain. So on any kind of pullback, I'd be looking to sell an out of the money bullish put spread, keying off of that level right there, which is $88. So if there's an 87.50 put, that would be of interest to me. Let's take a look. Let's see what we got. ETSY, try and key off that 87.50 level. We've got a holiday coming up this week, so that's going to take some of the excitement out of the market. Going to click on the 87 put and on the $86 put. I'd need to get a 20-cent credit for this spread. And you can see it's a negative 10-cent bid offered at 40 cents. Yes, maybe I could get that 20-cent credit for this. ETSY keying off of that breakout right there. You can see how strong it was on Friday. This stock wants to go higher. And I'm just going to go through and show you a few others. FSLY has been just crazy. MTCH, that looked pretty good. And you can see another nice little breakout there. That's support right now. So these are the types of plays that I'd be looking for. You can also draw an upward sloping trend line here. So now you've got this upward sloping trend line coming in at $92 along with horizontal resistance, which is now support. Yes, you could definitely sell that bullish put spread. Would I? Probably not. You know, I've shown you how to find some really good stocks for Monday, but I wouldn't be taking these trades. I want to see how the market opens on Monday. I want to let it come in. I want to make sure that that $300 support level holds. If I see continuous selling on Monday with a constant drip, drip, drip lower, that would be a sign to me that the selling pressure is super, super heavy and that we may have more downside. We may need to test that 295 level. We may even need to test the 100-day moving average. There are times when you want to be trading. There are times when you should be on the sideline. This is one of the times when you want to be sidelined. So these are simply some ideas for you. Take a look at these stocks, put them on your wish list, monitor them, watch for relative strength, see if they're holding up really well. And then when you're watching the market on Monday, and if you see the market open on its low, and then all of a sudden we get a nice, really good big bounce right off of that 300 level, and we start closing near the high of the day and challenging this downward sloping trend line, then I think you can start considering putting some of these out of the money bullish put spreads on because these stocks are strong relative to the market. If the market continues to drift lower, these stocks are going to hold up really, really well. You'll have a chance to evaluate. You can reel the trade back in, not have a lot of downside risk exposure. So if you are looking for a long or two, watch for that market bounce again. See if we get a little end of month, beginning of the month fund buying coming in. And ahead of earnings season, buyers tend to be engaged in the market, especially until all the mega cap tech stocks have reported. So I am neutral to slightly bullish in here, but I'm very cautious. We have very, very few positions on right now. So we're just going to evaluate the market, see if this is a little dip that we can sell some attractive out of the money bullish put spreads on. Thanks so much for watching. Please leave your comments. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss one of these videos. I promise you I'll have lots of education. I wish I could tell you right here, right now, what the market's going to do this week. Best advice I can give you is stay sidelined, keep your powder dry, wait for this opportunity to set up. It's either going to be an opportunity to the downside or we're going to have a chance to sell some out of the money bullish put spreads and the market will rally back into earnings. We're probably going to see some sideways action, I would say, through July and August, again, while we're waiting for everything to play out in the economic recovery to really gain some traction. Thanks so much. Have a good night. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up.
I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.